So a quick disclaimer, this video was actually filmed during lockdown. I filmed it, I wasn't sure if I should release it, if people will find it helpful, but recently I posted on my Instagram about a free trade giving away £10 if you deposit £10, and obviously I got hundreds of DMs, which I didn't expect, but yeah, I got hundreds of DMs and lots of questions asking, okay, now I've got money in this free trade account, what should I invest it in? Now, like I said, I'm not a financial advisor and I'm not a stocks expert, so I can't tell you what to put your money in. However, in this video I do give some oversight into a beginner's way into investing. That's why if you see the beard and my hair and the hat, obviously man's fresh now, but yeah, back then it was a bit sticky. So yeah, enjoy the video. What's good YouTube? It's your boy Nelson Ambills and welcome back to another episode of Daunting 101. For those of you who are new to the channel, I'm Nelson. I talk to you about the process of going from a young adult to an adult that's moving out, paying bills, dealing with debt and investing. In today's episode we're going to talk a little bit about investing. I'm going to be giving you a beginner's guide to investing in the stock market. I'm going to break this video down into 5 parts. The first being, what is the stock market? The second, why to invest in the stock market? The third, how to invest in the stock market. For point number 4, I'm going to touch on whether you can lose money and the risk associated with being invested in the stock market. And number 5 will be some final thoughts from me and some things to consider. Before we go into the video, here's a disclaimer, I'm not a professional investor. I myself am still a novice, I don't have hundreds of thousands of pounds invested in the stock market. This video is for information and entertainment purposes only. Before you invest any money in the stock market, do your own research and your due diligence on what platforms you decide to use. Now we've got all of that out of the way, let's jump straight into the video. So what is the stock market? The stock market is a place where individuals and institutions can come together to buy and sell shares. You hear the term stocks and shares usually together. They can be used loosely interchangeably. One relates to buying the individual parts of one business. To put it into layman's terms, when you buy a stock or a share, you're buying a small part of that business. So if I have 1,000 shares in Facebook, I would have that percentage of the total amount of shares available of Facebook. I would be an owner. And what happens as an owner is you get paid dividends, which is the company decides to share its profits with you. It can be paid out quarterly. So every quarter you get a small percentage of the company's profits. Company share prices go up and down based on news, economy, and other things happening around in that industry. For instance, with everything that's going on, a lot of airline companies, their stocks went down, meaning it would cost less to buy shares in name airline company here. You still with me? Great. So there are a number of stock exchanges across the world. An exchange is basically the name of the market for that country. So you have the New York Stock Exchange. In the stock market, you can also invest in commodities such as gold, silver, oil, all these things. I personally haven't looked at investing in those things, but you can do so. And also you can invest in currencies and the currency pairs, so you can invest in the pound getting stronger against the dollar or the dollar getting stronger against the yen. There are many things you can buy and sell, but I don't do those things, so I'm just going to talk about the idea of buying into businesses in stocks and shares. So you can either invest in stocks and shares, a share within British Airways, which is one of the companies in the FTSE 100, or you can invest in the FTSE 100 in a tracker fund, which means it measures all of the companies within that FTSE 100 and then provides a return or growth or loss based on the movement of all of them as a whole. Vanguard, Hargreaves and Lansdale, all of these companies will provide what they call a tracker fund, and it basically just tracks all of the movement within. You get a return or dividend based on the movement as a whole. The justification for this is that if you invest in stocks yourself and you choose, I want to invest in EasyJet, Ryanair and British Airways because you believe in the airline industry, and then suddenly a world pandemic happens and all of those go down, then you lose all your money because your portfolio wasn't diversified. Invest in the FTSE 100, using this example, you may lose some money because there are airlines within the 100, but there are also companies from different sectors and industries, so you won't lose all of your money but maybe a smaller amount. So when you are investing, it's good to keep in mind to try and diversify and not have all your eggs in the proverbial basket. Why invest in a stock exchange? One justification for investing in the stock market is bank interest rates are rubbish. If a bank interest rate at the moment is like 1%, you'd be lucky. it's 0.5%, and inflation is 2%. So in real terms, if you keep your money in the bank, you're losing money. Another reason to invest in the stock market is governments have been doing it for hundreds of years. Now, if the government believes that it's going to grow and that's the best place to do it, then who am I to say no? How do governments invest in the stock market? When you pay into a pension, guess how they invest your pension? That money is reinvested in the stock market, buying stocks, shares, commodities, bonds, and all the other good stuff you can find in the stock market. Now, if governments do it, I'm going to do it. Another reason to invest in the stock market is that a company's stock price can still increase despite there being a recession or a dip in the economy. An example of this is the US tech sector is up over 20% despite there being record job losses and unemployment rates in America. Just an example. And the final reason to invest in the stock market is the idea of compound interest. So for those who don't know what compound interest, it's basically money on your money. You've heard the phrase, rich get rich and the poor get poorer.
That's real, yo. I didn't exaggerate at all, man.
The idea is if you invest £100 and you get 20% return, the next time you get 20% return, it will be on £120. And then the 20% of the 120 will go to...
You stupid.
They're not.
What's 9 plus 10?
21.
% on top of that, and then 20% on top of that. So that means every year or every time your interest is accrued, it will be compounding despite you not actually putting in more money. So how to invest in the stock market as a beginner? So as a beginner, how do you invest in the stock market? I'll still classify myself as a beginner, and I'm invested in the stock market in two ways. One is through a robo trading software. Robo is like where they choose the investments for you. You don't actually choose what companies you invest in. You set a risk level between 1 and 10, and based on that, they're going to choose companies, commodities, and stocks based on how adverse you are to risk. So my personal portfolio is on 10 out of 10, and I use a company called Nutmeg. Robo trading does come with a fee, but I'll put a link in the description for anyone who wants to sign up to Nutmeg, so the fee is waived for the first 6 months, and I do get something as well from that. Once you do go through the process of signing up, it asks you a number of questions to determine how risk averse you are, and it suggests what risk level is appropriate for yourself. Over the last 5 years, Nutmeg has been the best and most profitable robo trading platform. The minimum investment is £500, and I'll say the first 20 people who register through Nutmeg, I'll send a £20 Amazon gift voucher. I only get £100 from it, but I'll give back £20 of the 100, plus you get 6 months, no fees, using it. You can put in £500 and see how you feel after a few months. It's up to you, do your own research on Nutmeg, on investing, on your own risk analysis. The second way I invest in the stock market is through an app called Free Trade. It doesn't cost anything. In contrast to Nutmeg, you choose the stocks that you want to invest in. There's no management or guidance from the platform. With Free Trade, I also have an affiliate link there, so I'll put a link in the bio where if you sign up using the link, we both get 1 free share valued up to £200. If by the time you see this video and you click on it, it doesn't work, just send me a message on Instagram. My Instagram is Nelson9Bills, it should pop up somewhere, and I'll send you a new affiliate link so we can both get a free share. Nutmeg and Free Trade are the two ways I invest at the moment. They're very simple. I'm not invested heavily in terms of the amount of money in there compared to the amount of money I have. I don't have a lot, so I don't have so much in there. God's grace, I'll have more soon now. So a common question that comes up is, can you lose money? In theory, whenever you sign up for these things, it says, be aware your capital is at risk. That means you can, in theory, lose money. When you see the charts of the stock market, it goes up and down, up and down, up and down. There could be points where the money you've put in, it does not reflect your balance, in the sense that there's less in there, and at the same time there's also the possibility of there being more in there. The stock market is never a straight line. However, over the years there is a general positive correlation, positive curve. If you have a long time horizon and you are willing to stick it out, in the long run you will make money, pretty much guaranteed. Again, I'm not a financial advisor, so if someone more educated than me can tell me otherwise, then more than happy to listen to it. Finally, some notes from the editor, me. Before you invest in the stock market, and this is a general rule of thumb, I'm not telling anyone what to do. Before you invest in the stock market, pay off your debts, pay off your credit cards, don't take out like high interest loans to put in the stock market. thinking, yeah, over the long run I'm going to make more money, because interest is a killer, and paying interest, you'll end up paying a whole lot more than you'll make in the stock market or anywhere else. So try and be debt free. Start with robo investing before picking stocks. It's managed and it's, you know, looked after by people who are professionals at this. But now I think I've given a decent overview on how to invest and some ways to invest, why to invest. If you liked it, like the video. If you have any questions, hit me up on Instagram, also on Twitter as well. I've done a few threads on these videos, so you can follow me on Twitter if you want to have a conversation on there. Till then, hustle. We out!